One reason that I trade the wheel strategy is that I enjoy it. The whole process is just fun to me. But fun or not, the wheel strategy is not for everyone. And in this video, I'm going to explain exactly who should not be trading the wheel strategy. I don't know about you, but for me, trading the wheel satisfies that itch that I have to do something actively. Most of my investments are passive buy and hold, but with the wheel strategy, there's some action involved. If you trade the wheel, I bet you can relate to this. With the wheel, you get a chance to get in there and do something, damn it. And it's not a completely foolish endeavor like trading stocks or routinely buying calls like they're lottery tickets. Those strategies are likely to lose over time. But the wheel strategy is different. It's actually less risky than buy and hold, especially when you only wheel stocks that you would own long term in your portfolio. But you should still proceed with caution because it's easy to forget the basic trade-off of trading the wheel. The trade-off is that your upside is capped. You only get to participate in some of the potential upside. You trade the rest away for instant income. That's the opportunity cost of trading the wheel. And then there's the downside risk, which is important to consider because you still have almost all of the downside risk that you would have if you simply owned the stock. You have all of the downside risk, in fact, except for that little bit of premium that you received. That's why some people dismiss this strategy as picking up pennies in front of a steamroller. And they have a point there, because I think that when we take an honest look at the trade-offs, the wheel strategy doesn't seem as appealing. And really, even though I like the strategy and use the strategy, it's not a good strategy for all investors. Here's who should not trade the wheel strategy, and the last one of these might be controversial. You should not trade the wheel if you're just starting out investing. Yeah, this one is obvious if we believe that the wheel won't outperform buy and hold in the long run. If you're just starting out investing, the wheel strategy is not the best strategy for you. It's likely to underperform buy and hold, and it's too complicated for beginning investors. If you're just starting out, you should invest in a simple index strategy and focus on boosting income and increasing your savings rate. Not only that, but the wheel strategy requires a lot of capital. Especially if you want to wheel high quality stocks and index funds, you need a lot of cash to secure your puts and to hold shares when assigned. And I would even go so far as to say that anyone in the accumulation phase of investing should think twice about trading the wheel. An exception might be someone who is still in the accumulation phase but has accumulated enough assets to coast into financial independence. At that point, you could use a portion of it, no more than 20%, to dabble with the wheel strategy. Try it out. Feel what it's like to collect income using the strategy. In that situation, the opportunity cost is not going to derail your larger goal of financial independence. But it could still slow down your progress. That's why most people in the accumulation phase should focus on a long-term approach and build up that pile of invested assets first. The next person who shouldn't trade the wheel is anyone who doesn't want to learn about options. If you want to trade the wheel strategy, you have to learn options. Not everyone wants to do that. When it comes to option selling strategies, the wheel strategy is kind of basic. But even still, it's worth taking the time to get a really good understanding of options. If you don't have a good understanding of options, you won't be effective as a wheel trader. You might panic and make the wrong move when an option you've sold moves against you. If you don't understand options, I wouldn't mess with the wheel strategy. I would learn all you can about options first, and when you're ready to try it out, start slowly with only one contract at a time. Next person who shouldn't trade the wheel strategy is anyone who doesn't have time to manage the strategy. Now, it's not like this strategy takes a lot of time on any particular day. I mean, there may be days or weeks where you don't even have to touch your account at all while running the wheel, but you do need to keep tabs on it and keep tabs on the movement of the market, keep tabs especially on the movement of your underlyings, and that takes attention and time, and not everyone has the ability to manage an investment like that. And maybe you work a job where you're away from the computer most of the time. And in that situation, you're probably not a good candidate to trade the wheel strategy. And if you really, really want to run the wheel strategy, maybe you should look into one of the covered call ETFs like JEPI instead. I don't know that I can fully recommend those types of ETFs, but if you're dead set on using the wheel strategy for part of your portfolio, well, you can at least put some of that money to work in a covered call ETF like JEPI or QYLD, and you can see how it does, because at least then you don't have to worry about checking into a computer all the time and managing your wheel strategy. Someone else is doing that for you. Another reason not to trade the wheel strategy is if you don't have use for the income right now. The wheel is an income generating strategy. If you don't need the income because you earn plenty from your job and you don't plan on stopping work anytime soon, there's no need to bother with the wheel strategy. The premium that you collect from the wheel is income that you'll be taxed on, whether you need that income or not. That's unless you're in a tax-advantaged account, which I'll get to that in a minute. But since it's taxable income, you should just use it as you would any other taxable income. If you're just going to let the cash you earn on premiums just sit around and pile up and do nothing with it, well, that's an indication to me that you've got time on your side and you might as well stick with the tax efficiency and higher expected return of buy and hold. But maybe you've got a lot of assets and you just wish you had an additional stream of income, almost like a side job. If you could use the additional income right now, then the wheel strategy might be worth trying. Another person who should not use the wheel strategy is someone who's going to do it in a Roth IRA. All right, this is the controversial one. And it's also a mistake I made when I got really excited about selling options, and I did some of it within a Roth IRA. It's tempting because the wheel is not a tax efficient strategy. Premiums are generally taxed as short-term capital gains, so a lot of traders prefer to trade the wheel in a Roth IRA. Despite the tax advantages of a Roth, I no longer think it's the place for the wheel strategy. In fact, because of its unique tax advantages, like tax-free growth and tax-free withdrawals, you want your Roth IRA to grow as much as possible over time. And for long-term, highest expected growth, the best strategy is not going to be the wheel strategy. The best assets and strategy for your Roth is probably going to be, you guessed it, long-term buy and hold stocks. Also, the point of trading the wheel, as I discussed before, is to generate income and use it. Roth assets are generally best left untouched for as long as possible. Roth IRAs are tax-free and they don't have required minimum distributions. So you want to leave those Roth assets alone, give them a long time to grow, and withdraw them only when you need them. So if you can trade the wheel in a taxable account or in a traditional IRA, if you're 59 and a half or older, well, that makes a lot more sense to me. So those are people who, in my opinion, should not trade the wheel strategy. The wheel is a very interesting strategy. I enjoy it, but it's not for everyone and it's not for every situation. It's a strategy that can provide you extra income, but if you're going to expect growth that outperforms the market, this is not the strategy for you. So just keep that in mind and try to recognize whether the wheel strategy is right for you in your situation or not. You know, they say that when you're holding a hammer, every problem looks like a nail. Just because you know how to trade the wheel strategy doesn't mean you should. I've definitely been guilty of that myself at times, and maybe I still am. I still question whether I should be trading the wheel at all. I think to myself, this is kind of a cool strategy. I've learned all these skills about how to sell puts, sell calls, roll these positions, select underlyings, all this stuff that goes along with the wheel strategy. And that stuff has been interesting to learn. And once you learn it, you just want to use it. But it's not always the right time or the right situation to trade the wheel strategy. A lot of times our efforts might be better focused somewhere else, whether that's a different investment strategy or whether that's putting more effort into our jobs or more effort into saving more money, more effort into enjoying our lives, whatever it is. Just because we know how to trade the wheel doesn't mean that we should. There are many situations like the ones I've explained in this video when it's not the right strategy. But if you enjoy it like I do and you've got your buy and hold portfolio well on its way to securing your financial freedom, well then, wheel on, my friends, wheel on. All right, that's what I have for you in this video. If you enjoyed this one, be sure to use that like button to give it a like and consider subscribing to my channel for more videos on saving, investing, and early retirement. Thanks for watching.